Let's go across to Rahul Chadha, founder and chief investment officer at Shikhara Investment Management. Rahul, thanks so much for taking the time. You just heard Piyush Goyal talk about the IT sector, and I wonder whether you would want to weigh in as well. Toss your hat into the ring. You have various other factors that you would consider, including the fundamentals, of course, and the valuations as they stand. What do you think?
Yeah. So again, what's happening in the market is very similar to what used to happen around COVID. In COVID, you had a stay-at-home basket and you had a reopening basket. And if you remember, till the time that reopening happened, or you had proper vaccine, every day you used to come in, and the stay-at-home basket used to go up, and the reopening basket used to kind of go down. A similar situation is playing out today in the AI disruptors and the AI losers basket, which is why what you see is some of these memory names which we have in a portfolio doing well, the TSMCs, the foundries, the AI infrastructure plays doing well, whereas the SaaS companies, which happened in recent weeks, negatively impacted by AI, some of the consumer internet names also negatively impacted, are going down. Now, again, if you ask me, there is kind of a no hurry. One is just watching for, let's say, some more clarity over here in terms of what is the nature of the impact. Look, valuations have got better, but they're not really screaming for 5-6% earning growth rate they're going to have. So from a regional fund perspective, again, what we are more interested is in some of the consumer internet names across the region, particularly some of these Chinese platforms or ASEAN platforms which have corrected. For our India fund, particularly, we had exposure to Cognizant, and I think with the correction we've seen in that name, that becomes attractive. But again, one would be mindful of valuations here. One would be looking at the growth, the market share gains for the respective IT company before gaining exposure. And I must also kind of qualify at this point of time, we remain underweight the sector because there are better growth opportunities in other part of Indian markets, whether it's financials, whether it's the manufactured exports, or even in some of the consumer internet funds.
Rahul, good evening to you, Neeraj here. And just wondering, is it the availability of better opportunities, or do you believe that there is a case that the multiples for some of these IT firms, Indian IT service companies, may contract even further? There are arguments being made that why shouldn't the PEG ratio be a 2.5, 3x, and why shouldn't that be the metric? In which case, a company which is growing 3-4% should not trade over 12 times P multiple. I mean, which is something that we haven't seen these stocks trade for a really long time. Do you believe that kind of a scenario is possible as well?
Yeah. So again, look, there is a fair bit of a probability here that the multiple for these companies can be 10 to 15 times, yeah, which is a 6% yield at 15 times, which is again for a 3-4% growth rate, not an extraordinarily cheap multiple. So that's a possibility. And one wants to here see what is the deflation happening, what is the revenue growth, what is the impact on the margin. So get more clarity on that. And like Neeraj, we've seen the market's very momentum oriented. A large part of the volumes in the markets are these pods, which work on revisions, price momentum, or these quant funds. So you need not stand in front of this big freight train. Let super attractive kind of evaluations emerge, which we believe should happen in next kind of in a couple of months as the market moves from these AI infrastructure plays to companies which can use AI to deepen their consumer connect and deepen the moat. And you will get opportunities. So, from a market investor perspective or market participant perspective, we'll scout for opportunities, let's say, whether it's the consumer internet, whether it's the financials, industrials across the segment.
Rahul, you described it very well. I guess the 101 response to facing a landslide or an avalanche is don't stand in front of it. But having said that, when you're looking at the earnings season, we're drawing to a close, right? I'm pretty sure that you've looked at a few companies. I'm wondering whether you're more positive than you were at the start of the third quarter and heading into the end of the year. Are you seeing green shoots, for example, that you might take into the new financial year?
I think things got significantly better over last 3 months. See, clearly we had government which was fairly proactive last 6-9 months. And to be fair, we've written it in a commentary that these high tariffs or reciprocal tariffs from US were the best thing to happen to India, because force the government to act and get the country ready for the next wave of challenges which comes through AI disruption. So eventually everybody knew that you will have a trade framework, etc. But the positive policy action which we got, whether it was on the GST front or whether it was on the labor reforms and all that front, etc., is going to bear fruit this year. And again, corporate India also pulled up the socks last year. So all that's positive. If you look at this kind of a quarter, particularly, you've seen credit growth pick up. You've seen kind of an advanced growth come through. I think the worst on the NIMs for the banks is behind. So you'll see the NI growth pick up. Credit quality has been fairly benign. So financials is something which should start performing. And from an India perspective, for rest of the companies, it's been a noisy quarter. You've had some revenue loss because of lower GST. You've had these provisions for the new labor bill, which has impacted profitability, etc. But clearly, I think industrials stand out. So we like that space because of the new kind of industrial private sector capex cycle, which is happening. Government encouraging all these investments locally because of PLI. There's a big opportunity because of this manufacturing exports, whether it's companies getting into new segments like aerospace, defense, or catering to the global power equipment market, which is in big shortage. So select opportunities exist. Yeah, you can build a good portfolio in this market without having too much exposure to IT.
Rahul, just one quick, very quick question. There are reports that Russia might consider moving back to a dollar trade with the US under some new agreement. A lot of financial news agencies are quoting this development, if you will. Not that it's a done deal as yet, and a lot could happen between the cup and there could be a slip between the cup and the lip, right?
Yep.
But could it be sentimentally important for the dollar? Could it be negative gold? Could it have any other implication?
Yeah. No, I think from a dollar perspective, what the market is slightly looking at is the policy making from the US, and staying here in US. I
Okay,
realize there's a clearly affordability crisis.
right.
So what it means is you will see more of measures of state intervention by the Trump administration, which are not exactly very good for dollar. The US fiscal deficit is 6%. Trade deficit is still high. So I think dollar remains under pressure under these conditions, etc. And then the capital looks for new homes because economic structures across the world are converging. Yeah. So US is looking a lot like China here.
All right, Rahul, on that note, thanks so much for taking the time. Appreciate it. And I must call out and appreciate that sometime last year, I remember having this conversation. You were talking about having gold and maybe wearing it. And that was before the massive surge that you saw in the yellow metal. Thanks so much once again for taking the time. Look forward to speaking to you soon.